it was also, it was, I think it was $350, and it was term, and it cost us $50. Okay, so almost tenth of the price that they are paying. Maybe they're a little bit older, 34. We were 30. I was 32. My wife is younger. So this is the big comparison of whole life and term life. Now, a couple things that they're talking about. Let's see, considering canceling both policies and would invest the money into Roth and 401k. Okay, so a couple comments about this question. First of all, I like math. Okay, so when people try to sell me life insurance, I was like, man, okay, let me count. If I put that money away every month into 401k, let's say, right? So they would put or the $460 $460 a month into 401k. Okay, so that would be about $5,500 a year. Okay, so now if we divide 300,000 by 5,500, what did I do? I did something wrong. Okay, 300,000 divided by 5,500 equals 54. So it's 54 years, okay, before you put away $300,000. Okay, so you will get the same amount. Well, obviously, plus it grows. Okay, it's not pure math. So let's say it's not 54. Let's say it's 20 years, okay, which is not going to be, but let's say it's 20 years. That means you will have that amount that you're covered with life insurance, let's say, after 20 years. Okay, so the point of life insurance, if something happens to you and you have dependents, in their case, if there's no kids, then it doesn't matter. The spouse moves on. You can also protect the spouse. Arguably, there's several school of thoughts about that. You can, but it's kind of sick, thinking about somebody kind of getting wealthy from insuring a parent or a child or a spouse, but it's different when there is dependents like kids. Okay, so that's the comparison of numbers. So life insurance, you get life insurance. Again, we're just talking about numbers in this example, right? $300,000. It will take you 20 years plus to get that amount by putting $460 a month away. Now, with life insurance, once you sign up for it, you have, if you pass in a month, in the two, in a year, okay, you would have comparingly $5,500 only to your name or in your saving account or in your retirement account like they wanted to do. So that's why we need life insurance. This is step 2 of wealth game. Because if something happens, all your plans go kaput, and that's why we need it. So in this case, I definitely would recommend canceling whole life insurance. However, if they have dependents, I would not cancel it until I get a replacement. Okay, replacement, even in the math that we just did here on a napkin, it's a tenth cost of the whole life insurance. So once you have replacement and you covered with term life insurance, yes, do cancel whole life insurance. Okay, and that's why it's better, that premium, like with the car. Imagine if we use this question about the car insurance, right, or house insurance. Well, why don't I just put that money into saving? It's the same thing. Okay, so if something happens, you get in an accident, and now you have to pay $100,000. Well, would you have that money? Would you have that money if you just put the premium that you pay for insurance into your saving account? You will not for many, many years, and it could be many accidents happening. Plus, you have to have a willpower not to use that money. Okay, this is just for accident for this car. This is for accident for this car, and this is for my house. If there's a fire. You can lose everything. Just same with your progress in your wealth game. Your family can lose everything with your passing and there is no life insurance. Okay. Um, and the biggest mistakes people make with life insurance would be it. They, they are buying whole life insurance because somebody sold it to them, but there's a lot of fees and how it's structured. It does not benefit regular person like you and I. I do not have whole life insurance, but I am insured up to, I think, $960. $960,000. So in case something happens to me, my wife can invest that money and live off 10% a year. Okay, so that is where that's the hill I'm willing to die on. So it's definitely do not benefit, and that's the biggest mistake that people do by buying whole life policies. Now, trust me, they pay a lot. They pay a lot to their agents, and that's why they're still being sold. But it's a bad financial product. Separate your investments from your insurance. Okay? All right, let's look at the next one. Okay, if you're joining us this morning, this is Vladimir with InvestSteady.com. In the mornings while you're driving to work or you're working out, we are talking here about finances, specifically about 10 levels of wealth game. Okay, I really like this. Well, I like the saying, I guess, that invest steady, increase your net worth, compound your net worth. Invest steady, compound your net worth. It's pretty cool. Compounding is amazing. All right, so this is what we got here. Update. I am deciding to cancel the policy. I guess before update, let's read what happened. Saw another post and sparked me to think about this. I was sold life insurance by a good older family friend when I first started working out of college. I'm a big proponent of taking responsibility. Take responsibility. You are not sold. You bought. You signed it. You decided to do it. Doesn't matter what they did. Okay, my wife, we sat through several timeshare speeches back in the day when we wanted to go on this discounted vacation. We had to sit through that. It's intense. It's intense. But we did not buy timeshare, and a lot of people did. So let's rephrase that. I bought a life insurance from a good old family friend when I just first started working out of college. She's like an aunt to me, and I knew she'd make commission. So I figured I figured it had just be another way to invest.